Well, the day has finally come, YouTube. We have finally crushed the goal of $100,000 within my Vanguard brokerage account. If you are brand new to the channel, welcome. I'm Ari, and this channel is for the dividend or value investors who are out there looking to simply build their wealth while minimizing as much downside as possible. Now, initially, I invested $3,000 into a Vanguard index fund back in 2019 before building up a dividend investment portfolio, which is now sitting, of course, well above the goal at $101,841.91. My intention was to just keep it simple, show you that it pays to be patient as long as you have a process down, and allow you all to witness the power of dividend investing as that dividend snowball rolls right along. With the initial goal crushed, the channel name will be changing from Blue Lion Finance to my actual name, which is Ari Gutman. And in today's video, I'm just gonna keep it simple with an update of what's been going on in my portfolio, the buys that I've been making in the past couple of weeks. Before we dive in, give that thumbs up button some love, and of course, join me on the journey by simply tapping on that subscribe button. I'd love for each and every one of you to now be on this journey with me. Now, YouTube, let's go ahead and dive right in. Just before we get to talking about these stocks, I think it's important to recognize the economic backdrop up until this point in time. We are, of course, in the midst of earnings season with a lot of emotional investing going on, hence all the bounces that you're seeing within the stock market. But personally, I'm awaiting the Federal Reserve's next announcement to hike interest rates, and I think they're going to do 75 basis points, which ultimately I foresee spooking the market and creating, hopefully, a massive buying opportunity. Now, I'm also keeping my eyes on that yield curve, which has remained inverted and is, of course, the biggest economic indicator of, I hate to say it, a recession. Well, actually, on second thought, as a long-term value investor, I'm in love with a recession because there's going to be a lot of fear and panic and emotional selling, and that's going to create a ton of buying opportunities for an investor like myself. But with all of that being said, I want to get honest with you in sharing that I have been doing a whole lot of buying as of late.
Boy, that escalated quickly. I mean, that really got out of hand fast.
And I've been waiting for the right buy-in opportunity for a lot of the core investments in my portfolio. Either which way, in the past week, I have been doing some nibbling. So the first stock that I recently picked up more shares of is Bank of America. That's ticker symbol BAC. Many of you probably already know that Bank of America is America's second largest bank by assets of over $2.5 trillion. However, in my opinion, any of these major banks, whether it's JP Morgan, Wells Fargo, Citibank, or my personal pick here with Bank of America, all are exceptional buys right now and should at the bare minimum be on everyone's watch list as interest rates are back on the rise, and banks being the biggest beneficiary of these interest rate hikes. Now, just think about this for a moment. Banks generate the vast majority of their revenue from loaning money to, well, all of us, and of course charging interest on those loans. That's right, the banker out there advising you to only stick to your monthly minimums on those payments, well, yeah, that wisecrack isn't exactly your friend. Anyhow, when interest rates were knocked to near zero back in 2020 at the onset of the pandemic, banks were among the hardest hit, and all of them saw their stock share prices literally plummet. Now, Bank of America fell by roughly 44%, and given interest rates have, of course, remained low ever since, banks have yet to fully recover. But now here we are with interest rates rising, and that's creating an opportunity for longer-term value investors. Yes, a recession is very likely, but in my opinion, a bank with a healthy balance sheet and that's well prepared for uncertainties that may lie ahead, well, if we just remain patient, we're sure to make a solid ROI. Now, just to get some more numbers from Bank of America, they recently announced their earnings. They fell short on some estimates while remaining incredibly strong with other metrics. Bank of America's revenue grew by 5.7% year over year to $22.7 billion. Their net interest grew by 22%, and average deposits were up by 7%. In terms of Bank of America's current market capitalization, it's sitting at $268.78 billion. And again, as America's second largest bank, it's just hard to see this one disappearing anytime soon, which gives me more confidence as a longer term investor. Now, as their shares are down from their yearly high here of $45 a share down to around $33 a share, creating a 26% change, a PE ratio at 10.4, I went ahead to pick up 2 more shares with a Bank of America for $61.70, now bringing my total share count of Bank of America up to 34 total shares, and I'm looking to get that position up to past 100. Now, in terms of where analysts stand, they're forecasting a target price of $42.79, an even higher target price of $55 per share. And given I'm a dividend investor in it for the long run, I'm just going to sit pretty and collect on Bank of America's dividend, coming in at 2.52% worth of a dividend yield. Next up, I went ahead to buy more shares worth of a healthcare company that typically flies underneath the radar, at least in my opinion. Yet it's an absolute powerhouse of a dividend investment. The company is Medtronic, ticker symbol MDT. It's a medical device company that has been advancing the medical industry and selling its products around the world since its founding back in 1949. Now, Medtronic has also built itself quite a moat with products that help patients with more than 70 different health conditions, making the investment incredibly safe as a buy and hold. Its market capitalization is sitting at $118.56 billion. Not to mention it's also a dividend aristocrat, but we're going to get to that in just a hot second. What makes Medtronic so enticing right now for me is it's trading at its near 52-week lows and really has not been trading over its fair value in quite some time since the onset of the pandemic, where the company has been hit hard with multiple challenges, from elective surgeries being rescheduled, which slowed medical device sales, to overall supply chain disruptions, again, hurting their top line sales revenue, and even labor shortages had impacted Medtronic, which all led to a 33% decline in their stock share price. The stock fell from $135 per share down to its current price around $90 per share. That PE ratio is coming in around 23.9, which is on the higher end. Therefore, I only nibbled at the position, picking up 5 more shares totaling $437.95, and it brought my share count up to 25 total shares worth of Medtronic. Now, for the icing on the cake here, hedge funds have been increasing their position with Medtronic, which is always a very healthy sign. Blogger sentiment is bullish, retail investors favor the stock, and overall news sentiment is positive after a newly signed $585 million deal to buy an Israeli diagnostics company, recently announced partnerships, and everyone from Seeking Alpha to the Motley Fool, and, well, me talking about the company. Not to mention forecasted growth from analysts coming in at a target price at $106.82 per share, and even higher target share price at $124 per share. Of course, until Medtronic actually ascends back to these stock share prices, shareholders like myself will be collecting on that dividend. As mentioned, it's a dividend aristocrat with 45 consecutive years worth of increases at a current dividend yield of 2.85%. And last but certainly not least, we have good old Johnson & Johnson, ticker symbol J&J, which in my opinion is one of, if not the safest healthcare investments that an investor can make. Whether it's Johnson & Johnson's rich 135 plus year history worth of revolutionizing the industry with medical devices, pharmaceuticals, or consumer goods, or quite frankly, just the general direction that they're heading in with continued progress and a brand new CEO saying the next decade is going to be something out of this world that we haven't seen before. Johnson & Johnson is just one of the healthcare stocks that I am focused on getting to 100 plus shares by continuing to dollar cost average my way into the position. Now, over the years, the healthcare juggernaut has amassed a market capitalization well above its competitors, sitting at $449.21 billion. And even though Johnson & Johnson's recent earnings beat the street's expectations on multiple fronts, generating over $24 billion in sales across operating divisions, with a 2.9% increase in sales from their consumer health division and a 12.4% revenue growth from pharmaceuticals, there was a bit of a sell-off where I was able to pick up the stock below $170 per share, which is where I decided to pick up a little nibble into the stock, picking up 2 more shares totaling $339.96, bringing my total share count up of J&J to 50 total shares. Of course, I'm paying a bit of a premium with their PE ratio above 20 at 24.9, but here's the deal. Well, I'll leave it to Warren Buffett in sharing that it is far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Not to mention, hedge funds have been buying into Johnson & Johnson more and more lately. Blogger sentiment is bullish, and retail investors are, of course, just always in love with this stock. Now looking ahead, analysts are also forecasting growth as the stock jumps to a median stock share price here of $188.71 a share, or an even higher target share price of $201 per share. And until it gets to those stock share prices, you better believe that I'm just going to be kicking back to enjoy the heck out of this dividend king at a 2.52% dividend yield. Now YouTube, that is it from Bank of America to Medtronic and Johnson & Johnson, the three stocks that I have been buying as of late. Now personally, I would love to know your thoughts on each of these companies, if they're within your personal portfolios or if you've been buying anything at all at this point in time, just given the craziness within the market. What stocks are you watching? Drop all those comments down below to let me know. Now keep in mind, I am not a financial advisor, so just always do your due diligence prior to making any major investment decisions following my videos. But it would greatly be appreciated if you just tap on that thumbs up button and help me grow this channel and get the word out there. Now also, if you haven't already subscribed, make your way over to doing so. I'd love for each and every one of you to be on this journey with me. Now YouTube, until the next video, I will catch you all there.